topics and opinions expressed in the following show are solely those of the hosts and their guests and not those of W4CY Radio, its employees, or affiliates. We make no recommendations or endorsements for radio show programs, services, or products mentioned on air or on our web. No liability, explicit or implied, shall be extended to W4CY Radio or its employees or affiliates. Any questions or comments should be directed to those show hosts. Thank you for choosing W4CY Radio.
Welcome to the Ask Good Questions podcast, broadcasting live every Wednesday, 6 p.m. Eastern Time on W4CY Radio at W4CY.com. This week and every week, we will reach for a higher purpose in money and life, as well as a focus on health and wellness. Now, let's join your host, Benita Bell Anderson, as together we start with Asking Good Questions.
Hello and welcome to the Ask Good Questions podcast. This is Benita Bell Anderson, and today we are going to spend a few minutes talking about a really important subject. I'd like to invite my buddy and long-term care expert, Scott Zimmerman, to the stage, to the podcast stage. Welcome, Scott.
Thanks for having me, Benita. I'm happy to be here and looking forward to having our conversation.
Oh, yeah, this is important for everyone. I'm so excited we're doing this today. So, Scott, tell everyone a little bit about yourself.
Sure. My name is Scott Zimmerman. I am besides what I do for a living, I'm a father, grandfather, husband, brother, son, and a friend, and my specialty is insurance, and one of my specialties is long-term care insurance, and this is my 35th year. I'm in Los Angeles, California area.
You're in the California area, okay?
Yeah. I'm sorry. I'm in Los Angeles. How many years did you say you've been doing it?
25.
Okay, pretty good. Pretty good. I'd say you're professional.
We've got a few years between us.
Yeah, absolutely.
Well, Scott, today we're going to talk about everybody's question that they have on their lips is, what do I do about long-term care? And most people go, I don't even want to think about that. That's been my experience with clients is I don't want to think about it. I just want them to take me out behind the barn, that sort of thing. So what would you tell somebody when, if they're going to say, okay, I guess I really should know something about this and whether it will impact me. What would you tell people that long-term care is?
Well, that's a really good question. I would start off by saying this. I write a lot of long-term care insurance, but I always say the same thing. I hope you never, ever, ever need this because it's the worst thing. It's good to have the insurance, but I hope you never need it. But a few things to consider, in my opinion, is statistically, it's like 7 out of 10 people are going to need care for an extended period of time, whether for home health care, nursing care, and everything in between. Statistically, stating, I'm sorry.
It's crazy to think about that. I've seen that statistic, and it's like, really? But we're living longer.
We're living longer, and medical is better, and it's keeping us alive longer. And it's a scary thing. Not everybody needs it.
Yeah.
If you don't have assets to protect, you really don't need long-term. I mean, if you don't have any assets, I don't want to say you don't need it. The government will come and take care of you if you don't have assets, but they're going to put you in a place that you probably won't want to be in.
Yeah.
If you have assets, the government's going to make you spend all your own money before they're going to kick in and pay for care. So it's kind of important to leave the care. That's where I would say it's kind of important to really think about having it.
Well, what would you say is the most important things that it covers?
Well, a few things. The most important thing I think it covers is, first off, it's peace of mind. People are always afraid, are they going to have their families take care of them? Do they, or some people will say, I want my family to take care of me, but I personally, like I got 2 girls. The last thing I want to do is be a burden to my family, if I need it. And I'll tell you one thing, I don't want them to have to bathe me and clean me and wipe me and do all this stuff. I want them to have a nice life, not have to worry about their aging old dad.
Been there, done that, Scott.
Yeah. I know a lot of people, it's what they call the sandwich generation, right? Where for the kids and the you're taking care of your parents. It's a scary thing. So I would say, it gives everybody peace of mind. I want to make sure I answered your question. Did I answer your question?
Yeah, and because we're going to get into some of the other details about it a little bit later, but I've had some people say, well, I've got Medicare, I've got health insurance, that's all I need, right?
Wrong. You do need those things, but those are not going to pay for care. I will say Medicare will cover the first 100 days as long as you've been hospitalized for 3 days in a nursing home. But you have to be hospitalized for 3 days, and then after 100 days, you're on your own. So unless of course you don't have any assets, then they'll cover you in a place, not of your choice, but yes.
Right, and they're very. It's called chronic. Medicare is not set up to be for chronic care. So, what does chronic care mean?
It means long, basically, in a like layman's terms, just long-term care. Chronic. You're chronically gonna need care for an extended period of time.
Yeah.
I would say this, especially nowadays, most policies cover everything. And they had the same exact qualifications most of them have the same qualifications. If you can't do 2 out of 6 ADLs, which are activities of daily living, that qualifies for all these plans to pay. Also, if somebody just has dementia or Alzheimer's, it's an automatic qualifier. So it's fairly easy to qualify for care. So if somebody falls down, I like to give this example, and they break their hip, which is kind of people talk about that type of thing. If you can't do 2 out of 6 activities of daily living, it'll pay. So you fall down, you break your hip, you can't get yourself dressed, you can't get yourself to the restroom, you can't get yourself to make food. I mean, those are easy qualifications.
Right. Yeah. And so basically, my understanding is that your physician will sign a piece of paper that's like, this is the shape that this person's in, and we need to activate the long-term care insurance. I mean, that's basically would be the process that the family would have that doctor sign this form, and then the form is sent to the long-term care company.
Yeah, the form is sent to the insurance company. Now, I will say the insurance company has the right to verify that coverage is needed, and you and I have been doing this a long time. I personally have, and I've had, I don't know how many countless claims I've had for long-term care. I've never had anybody declined, because who really wants somebody to come in their home and take care of them? Or who wants to go to a nursing home? Nobody. So when you're doing a claim, people, you really need it. It's the last thing anybody really wants to turn on. So, I mean, that's the truth.
My sister, I was going to tell you, my sister's been gone for 5 years. And one day when I was the caregiver for her, she looked at me and she said, and she was shaking her head, and she said, I never thought this would happen.
Nobody thinks it's going to happen to them. I don't think it's going to happen to me either, right? I really don't. Hopefully it doesn't, but
right.
I have an experience too. I mean, my dad was really sick for a long time. He had COPD. He was bedridden. He had oxygen. It was horrible. My mother was taking care of him, but they had long-term care insurance, and he did not want anybody coming into the home to take care of him. He refused, but it was killing my mother until my brother and I said, that's it, we're turning this on. It saved, he was so happy we turned it on. It saved my mother. My brother and I were saved. We weren't called every other day with, hey, the ambulance is coming, dad's on the ground. It's like, it's a lifesaver. It's a lifesaver.
Yeah. Oh, really, yeah. Absolutely. What would you tell someone when they say, well, what are the factors that would help me determine whether I should do this?
Just
get that crystal ball.
Somebody,
right?
Yeah, there's no crystal ball, right? It's I would say, again, if you have assets to protect, if you want to be able to choose where do you want to go, if you ever need the care, if you have a spouse and you wouldn't want to burden somebody in the event, or you or your spouse to burden you, not in a negative way, just it's a lot. It's a lot. It's not an easy thing. You've gone through it with your sister, and
And
it's when
others.
these things happen, it's a lot. It's a lot on the whole family. It really is.
Uh, my biggest thing is I've always wanted to tell people to get it as soon as they can, right? Because like, what age would you tell people you really should be thinking about getting long-term care?
Typically, people are really interested in it when they see what's happened with their parents or whatnot. But I would say in their mid to late 50s is like probably perfect timing. Some people get in their 60s, some people wait to their 70s. And, the sooner you get it, the better off you are because you're healthy. You can get it while you're healthy. If you're not healthy, you can't get it.
Right.
And, and there's also, I'll just say I don't know if we're going to get into these questions or not, but there's so many new types of plans out there that are so good that you don't have to lose all your money. Not it's like you're putting something in, it's not going to come back, which we can talk
No,
about.
we're going to get there.
Okay.
I want to just I'm trying right now to just lay a baseline of, here's some of the things about like who needs it, because like the way we titled this was, is this something that we really need to do or is it a waste? What would you say when I ask you, are there specific health conditions or family histories that would make this kind of insurance more necessary? What would you say?
I would say, first off, if there's a long history of people in your family that are having the same sort of illnesses, Alzheimer's, dementia, that's something I would definitely work on getting a policy on if that's in your genes. If somebody's, that would be the main thing I would think of, because other things are not, diabetes and things like that. If diabetes is controllable now, so it's not the way it used to be. But I would say mainly the Alzheimer's, dementia is where I really see that people should get that way they can.
Right.
Yeah. Are you feeling the same way?
Yeah.
Yeah.
I'm just thinking about I've got probably 5 or 6 family situations that I'm thinking of that I have been involved in one way or another. And, having that, I guess I'm kind of wrapping into the next question, because really what I'm talking about is a family support system, right? Like adult children or a spouse. But like I've got 3 daughters. They've all said, "Oh, Mama, we would take care of you." And it's like, that is really sweet.
Yes.
However, after taking care of my sister, and, it's just like, I never expected to have to take care of my sister like this. You kind of go, if people are saying, well, I don't know if I really need long-term care because I've got my family, but that family, they have children and they have jobs and they have spouses and they have a life. And, what do you think about having that family support system? Should that even come into the picture?
I think your family, this is personal preference. I'm not, not trying to push long-term care on anybody, but I would say that, family support is always going to be there with a policy or without a policy, no matter what. And, it's just a lot to put on a family when they have children or they have their own lives, and to have to take care of somebody. And your family, every family, I don't say every family, most family, they love their parents or their siblings or whatnot. They're going to be there for them, but I think it's almost not fair to put that burden on somebody. That's just a personal preference. If you have the means, I feel it'd be best to just take care of yourself.
Yeah.
Not put the burden on somebody else if you can.
Well, would you say there's ever any situations where you don't think you need to think about getting long-term care?
Yes, if you're extremely wealthy and you have enough money just to pay for care, and a lot of people do, right? I live in Los Angeles. There's a lot of money. There's a lot of money all around America. Actually, it's not about Los Angeles, but
Right.
people have money. If you can afford to pay for your own care and you don't need it, you don't want it, you never think you're going to need it, that's fine. Another one again is if you don't have any money, you don't have any assets, you don't need to worry about it. That's something that the government will take care of you. So those are the two extremes that I would say you really don't need to really worry about long-term care if you don't want to.
So, but there's a flip side to that, Scott, because so say somebody feels like they have been blessed with a fair amount of wealth. If somebody does have substantial savings, would there be reasons why they would say it would be worth it to have that? I mean,
Absolutely.
It's insurance. Why would they think that?
Well, yeah, I would think I agree with you. I would even think if you had wealth, I'd rather leave the wealth to my loved ones than to spend it on my care if I could. So, and with these new types of plans, it's not like if you buy a plan, it's almost like taking, the way I describe it is taking it from one, if you have money, taking it from this pocket and put it in this pocket, you still have your money, but now you have care if you need it. So I think and we can get into that in a little bit, but I think it still makes sense if you have money to have care.
Right. I think so too.
Yeah.
Because I'm with you. If you have been planning on leaving a legacy, whether it's to family or whether it's to charitable organizations, I would much rather have the insurance. I mean, it's just like, isn't it funny that we absolutely say, oh, I got to have homeowners insurance. I got to have car insurance. But you hope that your car never gets totaled. You hope that your house never burns down. But why is it that we should, my feeling is we should think about long-term care in the same way, that it's an insurance policy to guard against something awful happening in that area of your life. So I don't know.
Yeah, I agree. I agree. And if you really think about it, I like where you're going with this. If you really think about it, the chances of a car accident or your house burning down is way less of a chance of that happening than long-term care. If you're having that attempt.
Yeah,
you're absolutely right.
That's really something.
Yeah.
So what would you say if somebody says, oh, there's government programs, I don't really think I need it because, Medicaid will take care of me. What would you say to that idea?
Well, they're right. And maybe they are right. But again, if they don't have anything and they can't afford coverage, they're actually right? I mean, not right for everybody. Not everybody has money to pay for these things. But they're right. And if that, there's so many things we could do, like just doing the right thing or the wrong thing, and it's like making the right choices.
Well, could they just put money in a savings account?
Yeah, they could, but you're in the finance, money business. It would take a long time. If you think about it, the cost of care 1 month, whatever, it would take you years to save for that 1 month, right? I mean, it's a lot of money, the cost of care. So they would have to put away money for a long time.
I'm in St. George, Utah right now during the winter, but during the summer, I'm up in Washington State. It's anywhere between $6,000 to $8,000 a month to up to $10,000 to $12,000 a month for care, depending on what part of the state you're in. Absolutely. Is that kind of the same thing that you see in California?
I do see it, and I do see that. It's it matters how much. Nursing care is different than home health care, but yes, nursing care average on the low end is the 6,000 on up. Do you want to stay in a Holiday Inn or do you want to stay the Four Seasons type thing? What kind of services do you need? And then there's home health care, which is also could be very expensive also. So that's usually an hourly rate, and it matters how many hours that it's needed. So it can be very expensive.
Yeah. I'm thinking about my mom now, and at the end of her life, there was my sister and myself and my mom's sister, and then there was 3 nurses. So between the 6 of us, it was 24/7. And so we had this great big huge calendar and scheduling thing so that somebody was with her every moment of every day. So yeah, just the way it is. Well, I know that cost can be a big problem. What would you say? What do you see long-term care costing typically now?
It's a good question, Benita. It matters what type of plan, and also matters how much coverage. And not everybody has to insure the full amount. Sometimes it's just about insuring some of it or most of it, and because hopefully you don't need it. But I would say it's hard to say the cost, but I can give complete averages based on age. I would say the typical cost of care nowadays is it could be higher than this, it could be lower, better by age. Probably the $5,000 to $6,000 a year range, and sometimes it can be less if you're younger. It matters how much insurance you're buying and your age.
The cost of the insurance, the premium, right. like the monthly premium for a policy. What do you think would be an average for a monthly premium?
On average, $400 to $500 a month ish. I don't know what it kind of matters again by specifications. Mm-hmm. There's that, and there's other types of plans out there. I don't know if you want to get into that, but like
asset-based. I want to get through that. Yeah, in about 5 minutes, we're going to get into the other type of things.
Yeah.
So here's a way that I've thought about that monthly cost in context, and that is to say, okay, so you're spending $500 a month for a premium, but you're potentially covering yourself against $5,000 in cost, at least to $6,000 a month for the coverage
at a minimum, right?
Yeah. Do you think that's fair to?
I would say that's fair. I would say that's fair.
Yeah.
Yeah, and
it's just like it's kind of like how do you create the value? People have got to see, well, what's the value in doing this? And so that's kind of how I think about it.
Well, yeah, and we could also look at, again, statistics and averages, but it's like the average stay statistically in a nursing home is 4.5 years, and the average stay for home health care 2.5 years.
Yeah.
The other way around. I said it wrong. The average stay in a nursing home is 2.5 years. The average stay in a home health care is 4.5 years. That's average. So you can just calculate what it is. Insurance is really inexpensive considering.
Yeah. So have you got any ideas on how to make long-term care insurance more affordable?
I do. I have some great ideas. I would say that there's a few different types of plans out there. And, there's the regular long-term care insurance, use it or lose it. You're paying for something and hopefully you never need it. It's like car insurance. And those are less expensive, but the rates aren't guaranteed. So the insurance companies can raise their rates as long as they raise everybody else's rates who have the plan. But there's some other types of plans out there that are really popular nowadays. You want to talk about those type of plans now?
Yeah, let's get into that.
Okay.
Because I think one of the best, I think if it's taught correctly, then I think you're going to life insurance and or annuities.
Yeah, right? Or asset-based. Yes.
Yeah. So let's dive into that, and let's start with life insurance. How do you have life insurance be hooked up with long-term care?
It's a really popular type of plan. There's lots of different kinds. I'll just kind of do a brief overview. Basically, you can buy a life insurance policy, and there's different kinds. I'm just kind of giving an idea of one. Where, for example, if you bought a $500,000 life insurance policy, you can add a rider to it that just says, if I ever need care, you tap into that $500,000 by some companies are on average, they say 2% a month you could tap into. So you have 500,000, you could put 2% a month, which is $10,000 a month to pay for care. And you have a bucket of $500,000. So you can go lower than that or higher than that. And there's other types of life insurance plans that are similar to that, but a little different. There's different nuances that different plans have. That's the life insurance one. It's very popular.
Well, one of the ways that I've tried to, when I've taught people about this, I've said, okay, you know how when you think about life insurance, you think about a death benefit. So that happens when you die, right? And people usually go, yeah, I guess so. Well, the long-term care thing is sometimes the life insurance company, and tell me if they're still doing this, they'll call it an accelerated living benefit. So you're accessing a piece of the life insurance policy before you die.
Right.
It's
so,
like,
yeah, living benefits. You're absolutely right. They call it living benefits because you're using it while you're alive. And, again, it's hopefully one of those things. Hopefully it's just a death benefit. You live through your old age and your family is going to get, the beneficiary is going to get the money. But if the care is needed, you got this big bucket of money that you can tap into. But hopefully and if you only use half of the care, use half for long-term care, whatever's left is going to be a tax-free death benefit.
So the biggest thing that that I have seen be a problem is people will say, well, I've put all this money into this long-term care insurance, and if I don't use it, then I won't get it back. And I said, well, yeah, the same thing goes true for your homeowners and your car insurance. You're not getting any of that back either. But with life insurance, there's going to be a benefit to paying those premiums one way or the other.
It's coming back. Yeah, it's either going to be a death benefit, hopefully, old age death benefit, or long-term care if it's needed. So no matter what, it's not. You're right. You're not losing the money. That's why it's so popular nowadays. These type of plans.
And I had some mixed feelings about annuities over the years and how good they are. But one type of annuity that I think can be very valuable, is that where you're going next, is to annuities that have a connection with long-term care. Talk to us about that.
There's, again, different kinds, but there's some annuities out there and life plans too. They're kind of similar, where if you put a lump sum in, you have money sitting somewhere and you move it into a CD or a bank account or an investment account, and you can put a lump sum in, and as an example, somebody puts in $100,000. Almost all of it's liquid if they want their money back out, but that $100,000 could turn into $300,000, $400,000 worth of long-term care benefits. And it's the same thing again, almost like the life insurance. You want your money back out, you can have almost all of it back. You pass away, it's there for you. But if you need long-term care, it triples or sometimes quadruple. Yeah, it's amazing. So that's another really popular type of plan.
That seems like it should be a no-brainer.
No brainer. I agree with you. It's like I was saying, you take it from this pocket and put it in this pocket. It's the same money, right? Yeah.
Right.
Yeah. Very popular.
So, all right. Talking about these life insurance and annuities that have these long-term care benefits, how do those types of things compare to the traditional long-term care policies that we've been talking about at the beginning?
Yeah, well, I would say this. Traditional, that's how it all started. I don't remember how many years ago regular long-term care started. It used to be really affordable. And it used to be 20 years ago, there'd be 25 companies to choose from. Now there's almost no companies left. There's usually two. There's right now there's 2 or 3 companies that are still selling that kind of insurance.
Right.
The rates aren't guaranteed. It's a use it or lose it. You're paying for it like car insurance, and if you never need it, it's not coming back.
Yeah. Well, for instance, you and I both, so that people don't think we're just talking out of our hat. I have John Hancock long-term care insurance, and it's traditional long-term care. I got it. My husband and I got ours maybe 12 years ago. But the premiums have gone up now. And didn't you say you've got Genworth and you've experienced?
Yes. And I got really lucky. I don't know if go ahead. I'm sorry.
But the difference, there's some differences. So you and I both have that long-term care traditional policy. How is that different from something like a life insurance policy?
Well, it's totally different, meaning it's a use it or lose it. Whatever you spent, hopefully, you're not going to use it. It's not coming back to you. Where the life insurance or the annuity type plans, no matter what you're paying for something, no matter what, it's going to come back. It's coming back to your family, hopefully in a death benefit so you're not losing your money. That's the real benefit. The other benefit is they can't raise your rates on the life insurance or the annuity one. They cannot raise your rates. It's a contract. So that's where I would say the real benefits are. It's like you're not losing your money. It's no matter what, it's coming back to your loved ones.
So what happens if somebody buys a traditional policy and then they can't afford it later on? Something happens and they can't afford to pay the premiums anymore.
Well, then the policy will lapse and you won't have insurance. I mean, that's basically what happens. Yeah, it's just like your car or home on a traditional. Yeah.
However, I would say that there's one little difference, and that is the premium increase that I just got from my John Hancock policy. They tell you can accept the increase, or you have these in their
lower your benefits.
Lower your benefits, or they'll say we'll give you some cash, and I think mine was like $26,000 cash. Just they give you walk away paid up. So if someone couldn't afford the policy anymore, then that might maybe, there's no guarantee, but that might be something that they would get a lump sum back. However,
yes,
my concern for people would be that they wouldn't keep it for saving for long-term care, but they would spend it, and then you don't have anything.
Right, and even at that $26,000, that would be 4 months worth of care.
Yeah.
Right? Yeah.
Right. Yeah. And then it's done. Yeah. And it'd be, it's like a drop in the bucket, and it's like, no, I don't think so.
Right. Yeah. You kind of mentioned something I thought that I should have touched base on. Typically all these policies usually have a 90 or 100-day waiting period. So you really do have to have that reserve. It's almost like a deductible. It's like you got a 90-day waiting period. You need the care you're paying for the first 90 days of care before the policy kicks in. You really do need to have a little bit of savings still, even though you have a policy. Unless, of course, you have Medicare and you go into a hospital, you're hospitalized for 3 days, then they'll cover the first 100 days. So that kind of takes care of that buffer.
But you're right. I mean, like if like I have a client going into a long-term care, an assisted living facility at the end of this month. He had to pay $5,000. Well, that is because he's got a deductible that he's got to start paying for his care.
Right. That's how it works.
Yeah. So that why don't we talk about what are some of the things that you need to think about, like what do they call them? Features, right? Like how long of a policy should I get? What does indexing mean? We touched a little bit on the 90-day thing where you'd need to pay for the first 3 months out of your own personal savings.
Inflation protection we could talk about.
Yeah.
Right.
So let's
indexing.
talk about some of those features of a policy.
Okay. Well, with traditional long-term care, it's a really good point. You're setting up you're designing the plan exactly how you want it. The waiting period, 90 days, and go longer, 180 days, a year. You're setting up how long you want this policy to pay for. 2 years, 3 years, 4 years. The maximum that most of these companies will do nowadays is 6 years. And then you also have some other things you can set up where cost of inflation, every year the policy will grow. If you did an example, $100 a day, which most people would never do that low, but you can add on, you get inflation protection, 3% or up to 5% inflation. So every year your policy grows by that much. There's different ways to set it up and design it. And then when it comes to life insurance, it's a little bit different. They don't have inflation protection. You're buying a lump sum of money, so it's not so many moving parts to it at all. But those are what I would say when you're setting on that type of life insurance. You're setting up how much insurance you want. You're buying that bucket of money.
You're just getting a bucket of money
Yeah.
that basically reduces the death benefit.
If you use it, right?
Yeah. So if you had a $500,000 death benefit and you got 50,000, so then, I mean, and there's, you know, a little bit of play with the numbers, but roughly then you have $450,000 of death benefit, but now you've got that bucket of money to pay for the long-term care.
Right. Exactly. You said it exactly. It's almost like you're buying something with hopefully you don't use it for long-term care. And it's just a death benefit, like we've kind of talked about. Absolutely. Yeah.
So, you know, and I want to get back to, well, you know, like the whole idea of personal savings. So home equity, there's a very popular advertisement on TV with Tom Selleck about doing reverse mortgages. What do you think about that? About like home equity line of credit or reverse mortgage? What do you think about that sort of thing?
I think, you know, that's the last thing you want to do. That's just those personal opinions. Like, you know, my mom doesn't have a lot of money, and we have long-term care for her. We've had it for so many years, so it's been good. But she really wants to leave her house to her kids. Like, I don't need her house, but you know, she wants to. It's really important to her. And I think most people do.
Right.
Yeah, they'd like to leave. They work so hard for something. They'd like to leave it to their loved ones. But it is a last resort. So if you can't afford care and you don't have any money, you can. I think a reverse mortgage can make sense for sure. Well,
let's start wrapping this all up. Let's talk about what are some. I mean, the time has gone really, really fast. And what are some common misconceptions? What do you think people will tell you and it just ain't so?
Well, I would say some question I've been asked, you know, how do I know this is going to pay? How do I know the insurance company is going to be there and things like that? And I would say this. All these companies are big, strong, safe companies.
Yeah.
If they weren't going to be there, there'd be articles in the newspaper every day of something company going out of business. You've never seen a life insurance company go out of business where someone bigger and better doesn't pick them up. That's one. And again, if these companies weren't paying, you would see it. There'd be articles nonstop saying there'd be so much press that these policies don't pay. You don't see it. They all pay because nobody wants to turn these on. It's like a last resort thing. So if somebody's turning on long-term care, it's because they have to. They don't want to. So, and these,
my experience with people who are, I mean, just the industry in general, there used to be a lot of more companies that are not there anymore. And it's because people keep these policies because they know that someday they may need this.
Yes.
Right. And so the companies that are out there are strong and have factored in the insurance guarantees and promises that they're making that they're going to pay for this for people with these policies. What would you say about people? What mistake would you say people make when they are saying, "Oh, I'm just not going to deal with it. I'm not going to do it."
Mistake. I would say the personal mistake could be is hopefully you don't need it, and maybe it's not a mistake. The mistake being is if you have the money to pay for it and it's not going to affect your lifestyle, I would really look at it because it doesn't just affect you; this affects all your loved ones around you. And it's these type of things affect everybody, not just you. And
so, Scott, I want to stop you.
Yeah.
This whole podcast is called Ask Good Questions.
Yeah.
What are the good questions people should ask themselves when they're considering long-term care?
Okay. I would consider, do you think I'm going to need it? is my family going to be affected if I ever need care? Those are probably the best questions I can think of right now. Yeah.
So what would be the biggest piece of advice that you would give somebody who is planning for their future care needs?
Best advice I would give they're planning for their future is meet with a really good planner. Look at all your different choices. There's lots of choices. Look at them all, and investigate them all. See, because there's not any one right plan or right company that's right for everybody. I would look at all your options and make a really solid choice if that's something of interest to you. So you're picking something that fits your wants and your needs, and that's what I would do instead of just looking at just one company. Because that's what I would do. There's lots of plans out there and lots of ways to design them.
One of the things that I do with guests is I'll let everyone know that we will have a list of these questions and the important things that Scott thinks that you should consider with long-term care. That's going to be, there's a section of the podcast website that is called bonus downloads. And so Scott will have you make a list of those things that people should be thinking about when they're considering this. All right.
I would love it. That'd be great. So
Scott, we have got to wrap up. And so what would you like to say in closing?
I would like to say thank you for having me. I can talk about this all day. This is exciting and fun to talk about. And it's one of those things hopefully you never need. But I really appreciate you having me. And I want just people to be aware of what's available and some things to think about.
Yeah.
And I love your podcast. I love the word. I love the whole phrase, ask good questions. So I just think it's excellent.
Well, all the mistakes I've made in my life have been because I didn't ask good questions. And the reason I'm so passionate about this is because I know that when something happens, it's too late to ask questions, right? This is something you have to do beforehand.
Absolutely. Plan, right? Plan for the what ifs.
Plan for the worst and hope for the best.
Absolutely. Stay healthy, right?
Stay healthy.
Yeah.
So I would like to thank you again for coming on with us and doing this today. This is such an important topic. We'll have that PDF for downloading in the bonus downloads section of the website. And thank you so much for coming to the Ask Good Questions podcast.
Today's episode is over, but we did ask good questions again, didn't we? Don't miss out as we broadcast live every Wednesday, 6 p.m. Eastern Time on W4CY Radio at W4CY.com. Join Benita Bell Anderson next week for more conversations with experts on finances, retirement, behavioral finance issues, health and wellness, and more. Until then, remember to ask good questions.